Is the recent weakness in the British pound reflecting a belief that the Bank of England's tightening cycle is moving closer to conclusion? Well, the British pound has lost almost 4% of its value against the US dollar since July 14th and now sits just above significant technical support at 126 even level. Now, it appears that the primary driver of the pound's weakness is a growing belief that a shaky UK economy may cut short the BOE's plans for tightening. Now, the futures market had at one point priced in the probability for a terminal rate above 6.5%, and now that level has declined to 5.75%. The BOE has hiked 14 times since 2021 to a current level of 5.25%. That's following last week's 25 basis point hike, which was not a unanimous move. Now, the other side of the equation, the US dollar, has had a strong up move against all currencies in the dollar index since mid-July on a growing belief in a soft landing domestically, which would allow rates to stay higher for longer. Now, an interesting twist in the story is that the US dollar rallied in the aftermath of Fitch's downgrade of US debt to AA from AAA. Now, all things considered, this should have been a headwind for the dollar as it calls attention to the growing and potentially unsustainable government debt levels. Now, the CME Group offers three different size currency contracts, the standard, the mini, and the micro, in order to match a trader up with their preferred risk tolerance. We're going to be using the micros in these examples. If a trader believes that the British pound's recent weakness could continue, they could express that by selling the September CME micro British pound futures contract at 1.2720 and target a move to the June lows of 1.2400. A stop for this trade could be placed above at 1.2920. Now, this trade could make $200 if the target is reached and risks $125 if you're stopped out of your level. Now, if a trader believes that the British pound could bounce from here, they could express that by buying the September CME micro British pound futures contract at 1.2720 and target a move to the July highs of 1.3120. Now, a stop for this trade could be placed below at 1.2420. Now, this trade could make $250 if the target is reached and risks $187.50 if you're stopped out of your level.